Good morning, good evening, good afternoon. Welcome to today's edition of the Finance Rebel Show. My name is Kamar Ellis, as many of you know. If this is your first time learning about me or watching me, I talk about all things money, all things wealth, taxes, stocks, small business, investments. If it's about money, we pretty much talk about it here at the Finance Rebel Show. So today, I wanted to talk about financial planning and basically five things that everybody should be looking to do for year-end financial planning tips. It's the end of the year. It's always a great time to kind of reevaluate, see what you did right, see what you did wrong, figure out what you can do better, and how to get there. And so, end of the year is a great time to do that. So, not going to be on here too long, but I wanted to just talk about that real quick. So, first thing I think everybody should be thinking about right now is contributing to their 401k. And if they haven't contributed to their 401k, you're typically missing out on a couple of things, right? 401k is one of those special things that gives you multiple bangs for your buck. All right. What is a 401k? 401k is a retirement account where you work somewhere, or sometimes you work for yourself. You put money in out of your paycheck, it comes out pre tax. So the money is not taxed when it goes into this account. And many times your employer will also match those monies that you put in. So sometimes you might see a person might put in, I don't know, 5% of their pay, and their employer may match that 5%. Everybody is different. No plan is the same. But again, most plans typically have a match. All right. So the money goes in tax free. A lot of times you get a match from your employer, and guess what? It grows tax free. All right. Now, bad news is you have to pay the money. You have to pay tax on money when you pull it out. But oftentimes that is many, many decades away. I've seen many people become multimillionaires just because they put money into their 401k and their company matched. So it can be a really, really great thing. Um, this year's 401k contribution level is $19,000. So you can put in $19,000. Now, I know you might be saying I don't make enough money to put away $19,000, but guess what? There are people out there who make way more money than the law allows, and they're able to put away $19,000 easily. Um, Also, if you are 50 plus, you can put away another $6,000 for a total of $25,000. So if you're looking to catch up on your retirement because you're a little shy, you haven't been saving the way you need to, you haven't been investing the way you should have been, the 401k is a great way of doing it. Next year in 2020, the limits are going to go up. So you can put in $20,500, excuse me, $19,500. And you can, and the catch up provision for those 50 and over will be 6,500. So next year, all in for those that are 50 and over, they can put in $26,000 for the year. Again, the other benefit of a 401k is the investments inside of it. If you pick well, you can do well. Sometimes depends on the market cycle, but that's something you should be thinking about. Before I forget, please share this video with your friends, family, anybody who's thinking about increasing their financial capability, their financial, they're looking to increase their financial capabilities going to the next year. Share this with them. All right. Next thing you like to do a spending review. Again, review your spending for 2019. See where your money's been going so you can be accountable for it. Did you save? Did you spend money on a trip? Did you spend a lot of money eating out? Did you spend money on getting your car fixed? What about your utilities? Your money can really tell, where your money is spent can really tell a story of its own. All you have to do is just go back and look over it. There are plenty of tools out there that you can use to help you along with this. I mean, the first thing you can do is just download your bank statements and just start categorizing them in Excel. If you don't like doing that, or if that just scares the bejesus out of you, you can use a tool called Mint. And again, it'll pull down all your transactions and you can categorize them. Will it take a little bit of work? Yes. But I think your money's worth it, right? You work hard for your money. So You want to see if you are being a good steward of your funds and using it in the most efficient manner. All right. If you see you're spending a lot of money eating out on lattes, you might want to think about maybe packing your lunch or making coffee at home. Now, I am not the latte Nazi. I am not the anti eat out guy. I believe in living a good life. But at the same time, there are different seasons and reasons in your lifetime, and you always have to be very, very, very vigilant about that. All right. And what I mean by being vigilant about that is about figuring out why. So I just thought about retirement. If you feel as though that you are not up to par where you should be with your retirement, well, you might want to look around and see where you need to tighten the belt straps in your pocketbook and your wallet. If you feel like your utility bills are too high, you might want to do an audit and say, well, maybe I need new windows and I'm spending all my money on eating out. I can spend that money on new windows and I can reduce my utility costs. Again, your money, where you spend your money, it tells a story. Know what your money story is. Figure it out. All right. So the other thing you want to look at, I just talked about 401ks. You want to look at your 401k allocation. All right. You should be looking to reallocate your money at minimum every 6 months, I'll say. I like to do it quarterly, right? And what is the allocation? Basically, allocation in your 401k is how much do you have in stocks? How much do you have in bonds? How much do you have in cash? Does that mix? Like everybody has an ideal mix, right? So you could have, let's say, 80% of your money in stocks and 20% of your money in bonds. Well, I would look at that and I would say you're probably a young person, right? Because the stock market ebbs and flows, right? It goes up, it goes down. Many people are talking about there's going to be a recession coming soon. They've been saying that for the last 12 years. What goes up does come down, but you never know when it's going to happen, right? Having the proper mix for your stage of life is great. So like I just said, an 80-20 mix, 80% in stock, 20% in bonds. Well, the reason why 80% in stock a lot of times is recommended for young people is because, again, they have plenty of time to weather the storms of the ups and downs of the markets. And for the most part, the stock market averages anywhere between 7 to 9% annually. It will increase by 7 to 9% annually over like the last 100 years. Partly that's because stocks or companies tend to keep up with inflation because they're always innovating. They're always looking to be profitable. They're always looking to do things. That's part of the reason why I'm such a big avid stock market fan. I know everybody loves real estate. I got a video coming out about real estate today too, by the way. Check for that a little bit later. But I like stocks. I feel you can get just as much bang for your buck with stocks than you can with any other asset class that's out there right now. But going back to 401k allocations, you want to make sure that that allocation fits you, fits your lifestyle, fits the phase of life that you're in. If you are not a 20-year-old or 30-year-old and maybe you're 5 years out from retirement, 80-20 doesn't work for you. You might want to be looking at 50-50, 60-40, 70-30. You know, there's some other factors that go in line with that outside of just your the phase of life you're in. But you want to factor all those things in. You want to think about how well do you deal with risk. Are you nervous when the stock market goes up and then runs right back down? Well, if that's the case, you might want to look to be a little bit more conservative. All right. You don't want to take a whole lot of risk with your money, especially when you're kind of knocking on the doorstep about to go into retirement. So always be mindful of what your allocations are. Take a look at them. From my experience, most 401k companies don't do the best job of helping employees with their allocations. And I'll also say this too. A lot of times people don't take advantage of the 401k service provider as well. If you need help with that, you could always hit me up. Either send me a DM or I'll give you my text number later on. All right. So the other thing everybody should be doing, and now it's the end of the year, start reviewing your beneficiaries. What do I mean by that? People who will get your money if you are no longer here. All right. So pension funds, IRAs, 401ks, life insurance. Those are just a couple of things that are controlled by beneficiary designations. Your will does not control everything. All right. Your will does not control your IRA. Your will does not control your pension or your 401k or life insurance. Typically, whoever you left that money to controls that. I have seen, and it has been widely reported, when people forget to change their beneficiary designation, say when they get married or when they get divorced. There's been plenty of times when people have left their previous spouse on as their beneficiary and they died and the previous spouse got their money. So I know there's plenty of people rolling over in their grave, very upset that their, cheating, philandering, no good for nothing spouse got all their money. Now, hopefully your spouse isn't like that, or your ex-spouse isn't like that. Hopefully you all are best of friends. But just in case if you aren't, I think you might want to change your beneficiary designations, at least review them and make sure that the money will be going to who you wanted to go to. Quick note, don't try to leave money to people under 18, and do not leave money or make people beneficiary designations that have special needs. We are seeing a high rise of people with, say, autism, Down syndrome, and many other challenges and handicaps. 9 times out of 10, if they're not highly functional, the court will not allow them to have this money because typically they don't have the right state of mind to manage that type of money. So be sure that you are not listing them as your beneficiary designations or leaving the money in any of your accounts, IRA, 401k, pension, life insurance. Like I said, review them. All right. Review your life insurance policies. Actually, review all your insurance policies. Make sure you have enough coverage. I know a lot of people with life insurance, a lot of times they always have questions about what type of insurance they should get, how much should they get. And I'll just say this, for me, a quick rule of thumb: if you have kids, try to get $1 million in coverage. All right. Get the type of life insurance that fits your pocketbook or your wallet. Sometimes the life insurance folks like to sell you the most expensive policy because they get the highest commission. All right. Your aim, your goal is to leave your family with the most amount of money if you are no longer here to provide income for your family. All right. So keep all those things in mind. Keep all those things in mind. And there's one thing I wanted to talk about before I jump off. There was a case. What's going on? I'm supposed to be sharing my screen. Give me 1 second. Here we go. I wanted to talk about this advisor who basically robbed a lot of people. There's a guy out in California. I'm sharing the screen here of an article I just read. Gentleman's name is Ronald Roach. He's 53, from Walnut Creek, California. Him and his accomplice basically built a bunch of people out of a little under $1 billion, roughly I think it was like $910 million. You might as well say it's $1 billion, right? So this guy is a CPA. And so oftentimes I hear people talk about go to a CPA, use a CPA. All right. I just want you all to realize that credentials is not a replacement for integrity. Again, credentials is not a replacement for integrity. So I don't care if the person is a JD or a lawyer, enrolled agent, CFP, CPA, CHFC, the whole alphabet soup. It don't matter. You got to look out for people's integrity. Talk to folks that people have worked with before, not just professionally, but also personally. Look to see if there's any patterns, like if they do the same old type of shenanigans all the time. There's usually telltale signs. So, Bernie Madoff happened for a reason. Bernie Madoff happened for a reason because people trusted blindly. It's okay to trust, but always verify. All right. Trust and verify. And so I'm going to get out of here today, folks. But if anybody has any questions, help with anything, like I said, if anybody needs help with their 401k allocations, hit me up. Text me at 484-278-1357. Again, 484-278-1357. And please share this with someone who it could help. All right. I will see you all next time. Everybody have a great day. Kamari Ellis out.